Hi, everyone. My name is Casey Groves. These are my teammates.
Sweetie.
Shubhankar this side.
We are from Case Western Reserve University, and this is our proposal for a corporate financial wellness package, which we are calling the PNC BIRD. So first, let's take a look at current financial stress in the workplace. Right now, 85% of employees have said that they are worrying about their personal finances at work, and nearly half are saying that it impacts their productivity. The average American worker right now is spending 3 hours during the work week worrying about their personal finances, and employers are noticing this big time. 3 in 4 employers are saying that their employees' financial stress has negatively impacted their operations. If we take a look at this graphic below, so first looking at the blue and red bars, these are representing the proportion of employees that say they're financially stressed and who are favoring employers that offer financial wellness benefits. We can see that this has increased across generations, which kind of shows us how important financial wellness is becoming in the workplace and how urgently it needs to be addressed. Looking at the yellow bars here, this is the proportion of employees who want educational resources, and yet this is hovering at about a little over half on average, and yet only about a third of employees who have access to those resources are actually utilizing them, as shown in the green. And so what this tells us is that employees are not being properly incentivized to use the resources available to them, and that is something that needs to change. So in regards to our target business segment, we are focusing on small to medium enterprises with 100 to 500 employees generating roughly $10 to $100 million in revenue. Now you may ask, why did we choose this segment? So we believe that a lot of these small to medium enterprises, as they are beginning to grow, are realizing the importance of investing in their employees on the health of the overall company. And so we believe that this makes them more interested in exploring financial wellness package options so that by investing in their employees can then give their all while they are at work. And we believe this offers a really great market opportunity for PNC to take advantage of. Along with this, also, these employees or these businesses can vary a lot. Covers a wide range of different businesses, and they're going to be run by people who have varying lifestyle choices and varying life stages. And those require different needs that need to be addressed as well. So for example, here, if we're looking at maybe a young family, they're going to be more interested in talking about childcare expenses and how to budget that into their savings, as well as maybe looking at loans for their first mortgage or their first car. Otherwise, if you're maybe a young person in an urban area, you might be looking more at how to repay your student loans from attaining a financial or otherwise 4-year degree. And so really we want to focus on offering services that can be applied to a wide range of situations and a wide range of personas so that we can ultimately help as many people as possible take charge over their own personal financial wellness with the help of their employers. So some current demonstrated needs that we've seen based on the 2024 Financial Wellness in the Workplace report. People are pretty clearly challenged by looking at how to budget their savings, having enough money for retirement, paying off their debts, and covering any extraneous or unexpected expenses. And so based on that, we've identified 2 really big branches that we want to focus on in terms of how we can address those needs. So the first one is going to be education and financial literacy. This can be accomplished through in-depth workshops on special financial topics based on the company's individual needs, and also through self-guided individual learning platforms that cover the basics on how to budget your money, especially when you're new to the workforce, investing if that's something of interest to you, retirement planning, which everyone eventually will have to experience, and then debt management as well. The second branch that we want to see addressed is financial services, which we believe would come in the form of personalized advising, investment education and mentorship, some assistance in saving for retirement, also in being able to manage your money more flexibly, some guidance on how to manage your loans for cars and houses and other things, and as well as incentivization of financial milestones. All right, and I'm going to turn it over to Tejaswini.
I'm audible? Okay, perfect. So as Casey mentioned, we are focusing on the 4 parameters of financial stress that were pretty much the thematics of the financial wellness report. So we were like, what do we address first? And we were like, budget management, investment solutions, retirement planning, and debt management. These were the four important things which were causing financial stress, and you were like, let's address them. And this gives rise to our platform, the Bird, which will help you in spreading your financial wings. Now, what is Bird? When we were working on this project, we realized that PNC already caters a lot of their clients, their retail banking clients, as well as small businesses and corporate institutions as well. They already have lots of solutions, so we were like, let's pick and choose their existing solutions and utilize them to create our Bird platform. So we thought, let's take their Bank at Work program, which caters to their corporate institution, which is a holistic financial wellness program offered by PNC. And some other solutions like student debt solution, earned wages, retirement plan services, health and benefit accounts, and financial education, which they already provide to their existing clients. Clubbing it with our new solutions, which we'll be diving deep in the next slides, we came up with these 6 solutions as well, which focuses on the education as well as service platforms. As Casey mentioned earlier, we are focusing more on the education aspect of it so that people know why it is important to have financial wellness and how it helps you to decrease your stress at work and in your personal life. So we came up with Financial Birdie System. It is nothing but basically an employee accountability platform wherein employees can pair up with their peers, colleagues, or form small groups to collectively form financial goals. PNC in general will provide them with group challenges as, for example, let's say 1,000 collectively in your retirement account, and they will be rewarded by PNC in form of gift cards or discounted coupons with partnered companies. This again encourages accountability in terms of generating financial wellness as well as boosts financial wellness as well. Next, we have Financial Literacy Platform. It is nothing but a gamified goal tracker. It will help you understand it will help you, it's basically just like Financial Buddy System, but at an individual level. What it does is you can set budgets, savings, as well as understand your debt management, but on a gamified platform. Again, it will be a reward system and a point system basis, so as and when you achieve your financial milestones, you get points from PNC and you can redeem it in form of any kind of PNC discounts or gift cards or any other activities. Now we have Market Mentor, which is a premium services, which I will be talking about in later slides. But it is a platform which helps you understand what the stock market is. It is a comprehensive curriculum to understand the fundamentals of stock market, which will include videos, lessons, quizzes, so that people can run around and understand how it is safe, understand the safe investment strategies in a simulated environment without actually investing in a stock market. They will also have access to personalized support in form of exclusive webinars, as well as market updates for the stocks that they are tracking. This is just a hands-on experience to understand how market works and a very, very basic way to enter the stock market industry as an investment opportunity. Coming next is the services. We were like, now that they are well educated about how to invest and where to invest, let's focus on the services that we can provide to them. First, we have flexible payday. The wellness report suggested that a lot of people are usually stressed between their payment cycles. As soon as they come near the payday checks, they are more stressed. We were like, why don't they get access to a portion of their earned wages before the pay date or the scheduled pay date? So we have flexible payday where they can access the earned wages or 50% of their earned wages right before the date so that for emergency expenses. Again, this will help them manage their cash flows as well, and it is a budgeting tool, so it can always help them understand how, give them financial insights and also understand their cash flows and also give them tips and tricks on how to manage their wages. Next, we have a premium service called retirement savings micro investments. Now, small changes make bigger impact. We all know that. This is what it is all about. Retirement savings is basically over here. When an employee makes a purchase, they can round up their purchases and the change will be automatically transferred to their retirement account. And also they can allocate a percentage of their spendings or salary to this account as well. Now you might be like, we already have IRAs, 401k, then why this? Because a lot of SME employees earn a very low salary and are unable to pay large sum of money into their retirement accounts. If they can just make small contributions on everyday basis on their basic purchases, they can reap larger benefits for long term. Last up, we have micro loan matching, which again, a premium account, premium services, which is a low interest micro loan for emergency expenses. In this case, PNC, in collaboration with this, will be providing low-interest emergency funds to employees as and when required, and as and when the employees reach a financial metric or financial goal, PNC will help them match a portion of their repayment so that people can easily pay back their loans and at the same time build a good credit history. This again encourages financial literacy and at the same time helps employees to not worry about their debt. Now, how do we plan on providing this to our clients? We have two plans. One is the basic plans and a premium plan. Coming to the basic plan will already include the existing PNC product, including our new offerings, which is financial gamification, the literacy platform, financial buddy system, and flexible play day. At the same time, we have a premium plan, which will be health and benefit account and PNC earned it, as well as market mentor, micro loan matching, retirement savings, and micro investments. Now, this premium plan will also include basic plan. Again, this is to cater all organizational needs. Let's say a company wants to only provide a basic cost-effective plan to its employees, they can choose the basic plan. And if they want to go for a more comprehensive one, they can choose the premium plan as well. Again, this gives the clients the control over the services they want to offer to their employees, as well as help them meet employees' needs as well. And I'm going to pass it on how we're going to manage the 6-month plan.
Hello, am I audible? Okay. So we believe that as a team, if we fail to plan, then we plan to fail. So how do we make sure that our bird package is successful for all the employees and all the employers and their employees? So in the first 2 months, basically, we believe, like my friend Casey was going over the stats, there are solutions already in the market, but there's very low adoption rate. People don't use it. So what we're trying to do is develop habit of going into financial wellness. So we are going to launch our educational segment of services, that is financial gamification platform, buddy system, and market mentor. Along with that, we are going to organize workshops where we educate the employees on how to better manage their wealth. In our 3rd and 4th month, basically, we are going to introduce our services apps, such as flexible payday, micro investments, and micro loan matching. In these 3rd and 4th month, we are also going to go over the usage pattern of our first 2 months. And based on the usage pattern, we are going to reinforce the financial goals, because we might come across certain data points on what worked and what did not work. So we might adopt and pivot. So the last 2 months are basically data collection, having feedbacks, and based on those data points, we are going to refine our services. We might come across like certain points that did not work for our customers, for our employers. So we might change it, and then we get ready for a large-scale rollout. Why should our clients invest in this bird package? So first of all, it's a cost of about $100,000 annually to our clients. But why should they invest like 100K? What do they aim out of it? So we are targeting 4 parameters. First is productivity savings, which will lead to like increase in savings of about $234,000. Turnover savings, there will be turnover reduction. There will be less cost for hiring. So that will lead to about savings of about $40,000. Healthcare savings of about $35,000, and reduced absenteeism will lead to savings of about $24,000. So that's an annual savings of $332,000. So this leads to our ROI of about 233%. What does this mean? This means that basically our client, if they invest a single dollar, they aim to get about $2.33 in return. So this is a very golden opportunity for all our clients to partner with us in this bird package. This is a win-win situation for all of us. So that's all from us. Thank you.
6 minutes for questions.
Can I ask you about your financial model, just because it's there, if you go back one slide?
Yeah, sure.
So how big a company is this an example for?
Yeah, so we are basically targeting a basic plan, and this is based on 100 employees.
Okay, so like $1,000 per employee.
Yeah, cost.
Okay, and how did you decide your pricing model here? Like if you're creating $300,000 in savings, why are you charging $100,000? How did you come to that?
Yeah, so basically for all the apps and all the tech, basically infrastructure that we need, So we are going to have a certain cost attributed to it. So our bifurcation of $100,000 are given in this table. So that's how we came across $100K.
Any investment thoughts for PNC? Seems like a really quick build for 1 month. Please give me your developers.
So we are working here with the assumption that we have already developed the solutions. We are not going to develop our solutions in those 6 months. We are rolling out the solutions in those 6 months.
Yeah, I would just say my intuition is that $100,000 is a little bit steep from not just an employer perspective, because one of the things, it's much easier to remove somebody from pain than it is to tell them I'm going to prevent pain. We have a hard time as consumers, even as businesses, buying because we're going to prevent something. We're almost always in the middle of something that we shouldn't be in, and then we will pay for the service, and that's just what it is. So but at that price, that's expensive, and as an employee, I would just say, just give me the money, and then I'll figure it out myself. Like, so there's something there that is, I think, missing a little bit. But I did love your next-gen financial services. I thought that was really great.
Just to add to that about the development as well as services, these are the solutions that we are catering to. Like our scaling method is like providing these solutions to the existing clients because they're already utilizing PNC products. So once they are they're very much well-versed with PNC products, and we are just giving them additional solutions for trial and error and understand how this is benefiting them, and then expand and scale to the new clients as well. So I think it will be easier to cater to the existing clients, understand what they want, and then scale out.
And just to make sure I'm clear, the $100,000 is one-time fee that a business would pay? Or
It's an annual fee.
Annual, okay. Can I ask you about your microloan matching example? I didn't understand that. Who's making a loan to whom?
Yeah, so PNC will be providing a micro low interest loans to their employees, like the client's employees, basically.
So part of the $100,000 annual fee means my employees can borrow how much money from PNC Bank at what rate?
We haven't decided the low interest rate, but we are actually aiming that they can. So usually, like low interest rate over here, what we mean is like very basic necessities or something like that. So it could be within $10,000 to $20,000, because again, we are focusing here on SMEs. And when we were thinking about SMEs over here, given we are from Cleveland, Ohio, we have a lot of manufacturing units around, and we were talking to these employees who are in the manufacturing industry, and they struggle even like paying $10,000 or $20,000 even for their house rents or something like that. So even if we are able to give them microloans to pay off their rents, which is even like what $100,000 a month, I think that would be the kind of loan we are looking at.
I mean, the worry is that if $1,000 is a big deal to me, do you want to lend me $1,000 if $1,000 is like life-changing money to me? Like, am I a good credit risk?
Yeah, definitely that is something to think about. But I mean, what we are looking at here is, of course, we're not going to lend them like $1,000. It will be more than that, of course. But then again, it depends on the needs. And again, we are not going to give them straight out of our pockets. It's going to be on the basis of the credit risk and their employee credibility as well. So there'll be a lot of other parameters that we'll be checking before providing these loans.
If I may add just for a second, so microloan matching specifically is also based on like an application. So that's something where we would take into consideration, the situation that they're in, because I think this was really meant to address that concern over kind of unexpected short-term expenses that was addressed in the research slides. And so that was kind of the intent behind this, was to give people another option if an unexpected cost comes up where it's not going to give you long-term financial stress.
So just to kind of double down on that, so from the emergency loan standpoint, then you're thinking perhaps there's some sort of qualifying life event that would then put you into consideration. On the loan repayment match, just to be clear, because we talked about that $100,000 for the company expense, but then you mentioned that would go into the app build out, the expenses that would be incurred through the program. So talk to me just a little bit more about where those matching dollars would be coming from.
So they will be having like so as we mentioned, we have a lot of gamified platform. All of these will be a part of like one or the more or less same ecosystem. So as and when they achieve their milestones, let's say they are making regular payments to their debt, or they are making some advancement, they are contributing certain amount to their retirement funds or savings funds or something like some kind of milestones which we will be able to set for them or they can set for themselves. That's when we provide some portion of their, or let's say like the last amount which is due to be paid will be matched by PNC.